Will Japanese investment help the ASEAN nations? By www.forexconspiracyreport.com. Several factors are causing Japan to decrease direct foreign investment in China and increase investment in the ASEAN nations of Southeast Asia. Bloomberg reports that Japan shifts investment from China to Southeast Asia. Japanese investment in Southeast Asia continues to grow, owing to the region's potential and low labor costs, amid simmering tensions that reduce the appeal of China for some Japanese businesses. For a third straight year, in 2015, the amount of foreign direct investment from Japan to the 10-member Association of Southeast Asian Nations exceeded such investment in China and Hong Kong, according to figures compiled by the Japan External Trade Organization. The pace has been accelerating. The outstanding amount of Japanese investment to ASEAN nations almost tripled from 5 years ago to 20.1 trillion yen. $180.9 billion at the end of last year, according to Bank of Japan data. Territorial disputes between Japan and China over islands in the East China Sea caused many Japanese investors to rethink their China investments starting in 2012. On top of this, wages are going up in China, making it more expensive to do business there. And wages and the cost of business are lower in ASEAN, Association of Southeast Asian Nations. These are Singapore, Thailand, Indonesia, Malaysia, Philippines, Brunei, Cambodia, Laos, Myanmar, Vietnam. Taken as a group, ASEAN forms the 7th largest economy in the world with a GDP of $2.4 trillion. ASEAN. McKinsey.com helps provide an understanding ASEAN. ASEAN is a major global hub of manufacturing and trade, as well as one of the fastest growing consumer markets in the world. As the region seeks to deepen its ties and capture an even greater share of global trade, its economic profile is rising, and it is crucial for those outside the region to understand its complexities and contradictions. These nations provide a large, cheap labor pool from a population of 600 million people, which is larger than Europe or North America. However, more importantly, 60% of economic growth in the region in the last quarter century has come from productivity gains in transportation, retail, manufacturing, and telecommunications. ASEAN as a whole is the 4th largest world exporter at 7% of the global total. Only the European Union, USA, and China export more. With all of this promise, will Japanese investment help the ASEAN nations? And if so, how will that play out for the currencies involved? Trading ASEAN currencies. The major ASEAN currencies are the Singapore dollar, Thai baht, Indonesian rupiah, Malaysian ringgit, Philippine peso, and Vietnamese dong. These currencies are less exposed to China than Northern Asian currencies and are proving the most resilient in the region, according to Bloomberg. The Malaysian, Thai, and Indonesian exchange rates are the top 3 performers among Asia's emerging markets over 3 months. That's a reversal of fortune from 2013's taper tantrum when they trailed their northern counterparts as the U.S. Central Bank indicated it would wind down unprecedented stimulus. There is recurrent talk of a single ASEAN currency, but if that happens, it will take years, just like it did to create the euro. For more insights and useful information about Forex markets and trading, visit www.forexconspiracyreport.com.